We want to bring you a stock that's moving on an analyst call as well. Qualcomm shares are falling this morning. Wells Fargo cut the stock to underweight from equal weight, did keep the price target at 105, but this is the only sell equivalent rating on Qualcomm on Wall Street, which is interesting. And it's sort of in line with the firm's view overall on some of these mobile phone chip makers. They had downgraded Skyworks and Qorvo previously. Now the downgrade Piper, if you will, coming for Qualcomm.
Qualcomm had that was a challenging third quarter they put up that really shocked the market. But look at the different tone between this downgrade to sell on Qualcomm and then what we saw from Broadcom last week. Really a blowout quarter. The street couldn't get enough of Broadcom.
Well, this is another cycle story, too, because the smartphone outlook has been rattled by the number of consumers who are looking at prices and saying, you know what? As long as my phone is still working at this point, and I'm in the process of perhaps cutting costs where possible on the discretionary spending side, then I'm not necessarily looking at a new phone device that I need to buy right now, or that's even partially subsidized through a phone carrier. And so within that super cycle being pushed out even further within the smartphone category, that could have a longer term impact on all of the chip manufacturers. And as Apple is going further into investing in building out its own chips now, too.
Yeah, I mean, all of these chip makers have been hit by all of this perception, right? So at some times it is beneficial to Qualcomm to be concentrated in mobile, and sometimes it's not.